Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is June 11th, 2025, and we're diving into the first quarter earnings report of Oxford, the owner of well-known brands like Tommy Bahama, Lilly Pulitzer, and Johnny Was. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Oxford's latest earnings report provides a comprehensive look at their performance amidst challenging market conditions, and I'm excited to break it down with you.
Revenue and profitability overview. Let's start with the top line. Oxford reported consolidated net sales of $393 million for the first quarter of fiscal 2025, a slight decrease from $398 million in the same quarter last year. John, how does this impact their profitability?
Despite the slight dip in sales, Oxford managed to deliver an adjusted EPS of $1.82, which aligns with the analysts' forecast. Their gross margin, although slightly down from last year, remains strong at 64.3%. This indicates that Oxford is effectively managing its cost structure, even with the challenges posed by tariffs and trade dynamics.
That's interesting. How did their operating income fare?
Operating income on an adjusted basis was $39 million, down from $57 million last year. This decline is primarily due to increased SG&A expenses, which rose by 4.9% as the company expanded its retail footprint and faced higher employment and occupancy costs.
Segment performance and strategic initiatives. Oxford's brand portfolio is quite diverse. Can you tell us how each segment performed this quarter?
Absolutely. Tommy Bahama, their largest segment, saw a 4.2% decline in sales to $216.2 million. However, Lilly Pulitzer experienced a robust 12% growth, driven by strong consumer resonance with their current assortment. On the other hand, Johnny Was faced a 15.1% decline in sales, reflecting challenges in that segment.
What strategic initiatives is Oxford pursuing to address these challenges?
Oxford is actively diversifying and shifting its supply chain to mitigate tariff impacts. They've also opened 31 new retail locations since the first quarter of fiscal 2024, including Tommy Bahama Marlin bars, to strengthen their direct-to-consumer presence.
Financial health and liquidity. Let's talk about Oxford's financial health. How are they managing their liquidity and cash flow?
Oxford used $4 million in cash for operations this quarter, a significant shift from the $33 million provided last year. This was due to lower net earnings and increased working capital needs, including accelerated inventory purchases ahead of tariff implementations. Their borrowings have increased to $118 million, reflecting these strategic investments.
And what about their dividend policy?
Oxford continues to reward shareholders with a quarterly dividend of 69 cents per share, maintaining their long-standing tradition of consistent dividend payments since 1960.
Outlook and guidance. Looking ahead, what guidance has Oxford provided for the rest of fiscal 2025?
Oxford has revised its sales guidance to a range of $1.475 billion to $1.515 billion, slightly down from last year's $1.52 billion. They expect adjusted EPS to be between $2.80 and $3.20, factoring in $40 million in additional tariff costs. This guidance reflects the ongoing challenges in the trade environment and their strategic response to these pressures.
How are they planning to manage their interest expenses?
Oxford anticipates an interest expense of $8 million for fiscal 2025, with quarterly expenses ranging from $1 million to $2 million. This is part of their broader financial strategy to manage debt levels while investing in growth opportunities.
Key takeaways. In summary, Oxford has demonstrated resilience in a challenging market with strong brand performance and strategic initiatives to navigate tariff impacts. Their adjusted EPS met expectations, and they continue to invest in their retail expansion. John, any final thoughts on Oxford's investment prospects?
Oxford's diverse brand portfolio and strategic supply chain adjustments position them well for long-term growth. While they face short-term challenges, their focus on operational efficiencies and customer engagement should drive shareholder value.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial analyses. We'd love to hear your thoughts on Oxford's performance in the comments below.